One of the best investing strategies you can deploy is to try and find cyclical companies that are at a bit of an economic dip. Their operations are struggling because of a slower economy, and ultimately the market is generally on the bearish side. There's more negative sentiment towards that company. In this week's video, I'm going to be talking about one of those companies, but the secret here is that its operations are really not being impacted all that much by a declining economy. And this was a very heavily requested company by you, the watcher of this channel, and for good reason. These have been very, very strong companies to own over the last 15, 20 years, even over the last decade. And that company is CPKC. Canadian Pacific Kansas City. I'm going to go over the railway. I'm going to give my bull case, my bear case, and my overall thoughts on this company. I'm going to try to get this segment of the video under 5 minutes, and you'll have a good idea as to whether or not I think the company is a buy. When we look to a company like Berkshire Hathaway, they purchased BNSF Railway a while back, and what Buffett had said is that this is not an investment for the next decade or two. This is an investment for multiple decades in the future, and the main reason for this is just the dominant nature of railway shipping. It is more efficient, the infrastructure is built out, and there is no feasible way to ship things like oil, grain, a lot of heavy based commodities, and a lot of heavy infrastructure by trucking. It just can't be done. And as always, everybody, there is that fresh report in the description on my top 4 holdings. I give you my research, my thesis, my risks, my overall allocations, how much they make up on my portfolio. It is an absolutely free report. It's going to help you become a better investor. And as always, like the video, subscribe to the channel. But let's get right into Canadian Pacific. So what is Canadian Pacific? It is one of the more dominant Canadian railways, especially post-acquisition with Kansas City Southern. It got in a bit of a battle with CN Rail over this acquisition a few years ago, but ultimately, because it had less exposure south of the border, it was able to go through with the acquisition, whereas CN Rail ultimately was rejected by regulators. So what this does is makes CP Rail the first railway in North America that is interconnected between all 3 countries. We have Canada, the United States, and Mexico. And what this does is allows it to ship parts from, say, Canada to Mexico without having to offload it to another railway. This interconnection is huge for the company and is one of the main reasons it paid a lot of money for Kansas City Southern. So we all know what the railways do. They're fairly simple businesses. So let's get right into the bull case. And the bull case is just the economic moat. There are very, very few railways in North America, and the infrastructure is virtually impossible to replicate. You could replicate it, but the costs are absurd to do so. We're talking about $1.5 to $2 million for a single mile worth of flat railway track. When we consider the fact that we're going to be going under, we need bridges, we need tunnels, we need all this type of different stuff, the financial feasibility of actually developing a railway track are something that no company is ever going to entertain. There has not been a new Class 1 railway in decades. The Kansas City Southern acquisition is expected to add up to $1.5 billion in synergized revenues through 2028. And it gives it a significant competitive edge over, let's say, BNSF, which is Berkshire Hathaway's railway, or CN Rail, because of that direct shipment without the need to offload and send to another railway, a separate track, things like that. This will make it a lot more efficient. Shipping by rail is 3 to 4 times more efficient than shipping by truckload. This is just the nature of the business. This is exactly why a huge chunk of freight is still shipped by rail in North America. We're talking 30% in the United States, upwards of 45% in Canada, and I believe it's 25 to 30% in Mexico as well. As more and more companies move to be more carbon friendly, carbon neutral, carbon zero, the fact that railway shipping is that much more efficient ultimately means that more companies will choose to ship by rail. Now, the final bull case would be the efficiency of the company's management and its capital allocations. CP Rail has been a much better capital allocator than CN Rail. They have chosen timely share buybacks that aren't necessarily at all-time highs, whereas CN Rail has bought back a lot of shares at peaks. They've taken on a lot more debt, and they haven't been all that responsible in paying down the debt. CP Rail does not prioritize dividend growth. Instead, they prioritize debt reduction, and ultimately, the acquisition of Kansas City Southern is highly likely likely to be more beneficial to shareholders than dividend growth. Now, the company has expanded its dividend growth policy. It recently raised the dividend by 20%, but I do expect it to continue to hammer down debt levels, all while increasing that dividend. Now, the bear case, it's capital intensive. Railways spend a ton of money on capital expenditures. Now, the one thing that is a benefit of this is capital expenditures laid out in the railways often produce revenue for decades, unlike, say, a telecom company where the infrastructure quickly becomes outdated and they need to continue to expand on it to earn money. There's tracks that have been in the ground for 40, 50 years that are still earning revenue for this company, but the fact that they lay down this amount of capital expenditures results in high debt loads, and ultimately, it is a capital intensive industry. The second bear case would be that trucking is still faster. Now, there is an element here that, again, railway is more efficient. It can only ship certain things like commodities, stuff like that, but it will face competition from the trucking industry, especially if the trucking industry can get freight prices down. I don't expect this to have a material impact, but it could have a small one. And the final bear case would obviously be that economic cyclicality. I mean, we're in a freight recession right now, a big freight recession, and ultimately, although CP Rail is growing earnings and they expect earnings to grow at a double-digit pace moving forward, this is primarily from the acquisition. There's no doubt right now the railway industry is struggling, the trucking industry is struggling, the fallout from the COVID-19 pandemic and the lower spending in terms of freight, it's driving down prices. The railways can handle this a bit better than the trucking companies just because, again, of the lack of competition. But ultimately, we need the economy to pick back up again. And when it does, there's a very good chance that CP benefits from this because there is simply no other railways to go to outside of CN and maybe BNSF. But that does not necessarily mean that the company won't be impacted because ultimately it is one of the only railway producers. So when railway freight falls, it will hit CP's results. So my overall thoughts on the company, I think it is an outstanding company. It has outperformed the S&P 500 over the last 10 and 15-year time frames. It is in a bit of an economic slump right now. But the thing with these economic slumps is in many industries like trucking, say, for example, there's no guarantee that a blue chip trucker will recover because heightened competition can lower prices and impact their results. But on the railway side of things, when volumes pick back up, there is really nowhere else to go besides a select few players, which means volumes will ultimately pick up for CP. They're becoming more efficient. They're hauling heavier cars, more goods, and improving fuel efficiency at the same time. So ultimately, when the economy picks back up again, I do believe this company will fall in line to historical valuations and there could be upside potential. I own CP. I sold CN Rail last year to buy CP Rail. I do believe it is a better operated company, and I do believe that it is one you can't go wrong with over the long term because railway companies will continue to be the main driver of the North American economy in terms of freight shipping. So everybody, that's it for the video. Head down below, like the video, subscribe to the channel, grab that free report on the 4 top holdings inside of my portfolio. I do own CP Rail. Is it one of my top 4 holdings? You can find out in the report below. And as always, stay tuned for more great investing content.